move on to company news now. The Premier Group share price has risen by just over 6% following robust annual financial results. The fast-moving consumer goods firm has posted double-digit profit growth despite a tough operating environment due to poor municipal infrastructure and the impact of load shedding. This includes a 26.4% increase in operating profit and a 17.4% hike in headline earnings per share. The producer of Blue Ribbon Bread, Iwisa Maize Meal and Snowflake Flour, also reported a 3.6% revenue hike. The entity, which listed on the JSE over a year ago, has further declared a final dividend of 220 cents per share. CEO Kobus Gertenbach, who has been quoted expressing satisfaction, speaks to us now. Thank you so much for your time, Kobus. Let's first talk through how the company managed to produce these results under the current tough climate.
Well, thank you very much for the opportunity. We have been investing in our business and especially in our manufacturing plants for a number of years now, continuing to build the scale of our operations and the efficiencies with which we operate. And I think during the last year, we've really managed to bring a lot of that to bear. So we continue to focus on being the lowest cost producer in the categories that we operate in. We did see a deflationary environment in global grain prices and passed a lot of that reduction in grain prices through to the end consumer, especially in the maize side. But at the same time, managed to also run our operations efficiently enough in order to deliver the results.
And it's on that point, Kobus, that I want to ask about the consumer that is cash-strapped, and we are seeing that spending power continues to dwindle given the current pressures of the economic environment. Where is it that companies such as yourself have a role to play to ensure that there's at least a buffer?
Well, I think in the first place, it starts with normal capital environment where you have very strong, robust competitors and competition in the business every single day. I mean, we certainly are subject to enormous competition, especially in markets that are quite fragmented. No one has really got a dominant market share within any of the milling or the bread space. And then over and above that, it is being able to run your manufacturing facilities at maximum efficiencies, maximum throughputs, and in order to be able to actually make a profit at the price points that you are putting in the market with your competition. You have to buy your raw materials at competitive prices. We certainly put a lot of effort into that. And then lastly, I think that you have to manage your price points in the market in a way where you're both responsible in terms of the giving the consumers as best a deal as you possibly can, but also being cognizant that you need to operate with very thin margins in these categories, and that you can't afford to really give away all your margin and end up not making the profit that you need in order to sustain your operations.
A careful balance that is required. Do also tell us about circumventing the challenges that you've noted, those including the impact of load shedding as well as municipal infrastructure.
Well, I think that load shedding has now been with us for almost 2 years. I think it really started out being rife in September 22. And so, if a business like ours hasn't managed to make some plans and put contingencies in place, then we wouldn't be worth our salt. So at the end of the day, I think our operations has come a long way. There are parts of our business that simply cannot generate electricity from alternative means and will always be subject to the getting power from the grid. But we can also constructively work with local government, especially the municipalities in some of the smaller towns, and work on other ways to save electricity, perhaps during other times of the day, where we then have arrangements that doesn't affect us quite as harshly when there is load shedding. So we've just decided as a business that load shedding is one more challenge we need to face. We're not going to try and make excuses for ourselves, and we just need to run to the best of our ability. And I think we've been very fortunate that in recent months we've had the benefit of the grid really having stabilized a bit in the short term and hasn't posed the same level of challenges for us.
Absolutely. Finally, though, that confidence in improved climate as inflation is also expected to continue easing, and the notation that you've made of reduced load shedding is in a form of reprieve, and elections being behind us, is there a level of sentiment that says we are at least trotting along towards a better environment?
Yes, absolutely. I think that the outlook for grain prices, I think we pretty much are at levels where they look like they pretty much going to be sustained for the rest of the year. And so we don't anticipate major price moves from year on in. Bread might move a few cents here or there, and you may have the odd rand or two that move on maize meal and cake flour and some of the other bulk staples. But barring a big spike in the rand-dollar exchange rate, that's always very important to us. If we do get a very amicable, market-friendly solution to our government with the first sitting of Parliament on Friday, there's always a chance that one might see a bit of a strengthening in the rand, and that will immediately feed into lower input costs for any business. I think that we would hope that the consumer would then also be able to benefit from that, if not necessarily in terms of reduction of prices, but certainly with prices moving sideways and not spiking up significantly in the remainder of the year.
Thank you so much for your contribution. Kobus Gertenbach is the CEO of the Premier Group, talking us through their latest annual results, quite robust of a showing in performance there.